Many NRIs and OCIs are looking at India with optimism now. So in today's video, let's see how to invest in Indian stock market through PIS and non-PIS. I want to give you a flow chart, kind of visualization about how transactions take place so that you will not be confused with the terminology. Hello everyone. Welcome to Keerthi's FinFo NRI community. I'm CS Keerthana. I have done my CS from India, CMA strategic level from UK, and I'm also a SEBI registered overseas MFT. I live in Dubai and I run a firm, The Consultancy, and it's specialized in NRI services. We offer investing tax planning services for NRIs. Every week, I bring an explainer video on the topics which are related to NRIs in this channel. If you are looking for the informations related to NRI issues, please subscribe my channel. In today's video, I am going to explain a topic which was asked by many NRIs for a long time now. What type of account we need to use if we want to invest in Indian equity. So stay tuned till the end. Many NRIs and OCIs are looking at India with optimism now, especially when uncertainty has clouded over other major markets. When China is in property crisis, geopolitical tensions in Middle East, and rising debt of US has made leading credit rating agencies to downgrade US securities. They believe India has shown exceptional resilience in this difficult time. With its structural reforms and macroeconomic stability, NRIs are actually getting strong conviction that India is a rising star in global economy, at least for now, next 10 years. They want to participate in India's growth through equity investing, but they don't know how. If an NRI opens an account like resident and starts investing in equity, later he will be in a big trouble. So many NRIs who want to invest in equity in India have lot of confusion, starting from the type of the bank accounts, demat, FEMA procedures, and what is this PINs? Is it a separate account? Is it enough to hold only PINs account? If so, then what is non-PINs? Or which account is allowing us to repatriate and which account doesn't allow to repatriate? I know, questions will never end. But don't worry, I am here to clarify all the doubts NRIs must be having. Our firm, The Consultancy, is already helping hundreds of clients to invest in Indian mutual funds. So we are dealing with this kind of questions on daily basis. If you want to invest with this through mutual fund, you can book your free 20 minutes consultation using our website or the link which is given in the description. But if you are confident of picking the stocks and investing directly with the listed Indian companies, then you can use two different accounts. That is PIS or non-PIS accounts. Some people call this as PINs and non-PINs as well, but here in this video, I'll be addressing this as PIS and non-PIS. So in today's video, let's see how to invest in Indian stock market through PIS and non-PIS. What are these PINs or non-PINs account, and what is the rationale behind having these two type of accounts? How to open these accounts and which bank account you should be linking to this. So at the outset, I want to give you a flow chart, kind of visualization about how transactions take place so that you will not be confused with the terminology. To invest in equity market in India, you need to have a bank account, trading account, and demat account. Now see, bank account is for fund transfer. So you are pulling and receiving the funds when you are selling in this bank account. Here you are deciding whether you need NRI or NRO. Next is trading account, which is held with the brokerage such as ICICI Directs, just to give an example, where you are using this as a platform to place the order or execute the transaction. Lastly, there is a demat account which is opened with depository. In India, there are two depositories, NSDL and CDSL. So these are storing the shares or the securities in dematerialized form. Now, from the bank, when you buy, the fund goes, Transaction is executed in the trading platform and then it is held in demat account. Same way, when you're selling, what happens? The reverse process is happening here. The security is fetched from demat and through the depository participant trading account, bank is receiving the money at the end. It is critical to understand because these three accounts which I've mentioned now can be PIS or non-PIS depending on what and where you want to buy, which I'm going to explain going forward. First thing first, PIS. What is PIS? It's a scheme of Reserve Bank of India to monitor all the investment done in Indian market from abroad. So this is how it keeps a strict watch on NRI and OCI investments. Whoever is wishing to purchase bonds, shares, debentures or any listed securities in India. Because PIS is supposed to be opened through a designated bank branch which seeks RBI approval at the time of account opening and keeps reporting all the transactions type, volume to RBI from time to time. So, now I hope 2 points are very clear here. Only NRI or OCI is eligible to open these accounts under PIS scheme, Portfolio Investment Scheme, and he or she makes an application to RBI through a designated bank. Now, the obvious question here is why RBI should monitor? FEMA compliance. This is the main reason behind it. See, you must be aware that NRI or OCIs are prohibited from investing in certain sectors, certain instruments, and certain sectorial cap is also applicable. For example, the overall limit cannot exceed 10% of the paid up capital. So if you need more details, kindly watch the full video here. Now moving to the very important question. What is PIS account? It's called Portfolio Investment Scheme. You may link this account to your NRE or NRO bank account. So if you are having NRE PIS, then repatriation is super easy. If it is NRO PIS, repatriation is done with certain procedures and there are some restrictions placed here. You can't repatriate freely. However, if your intent is to invest out of the funds that you are getting in India, such as rental income, etc., you may prefer this also. So it is up to you. If you are in confusion, you can have both NRE and NRO PIS. But remember, only with one bank. If you want to shift the bank, then the earlier PIS account has to be closed. Now, PIS is used mainly to make the secondary market transactions. It doesn't allow you to make the transactions like subscription of IPO, initial public offering, mutual funds, or selling the shares which you have bought as a resident or the bonus shares which you have received and now you want to sell these bonus shares or you want to trade in derivatives using NRO account, then you cannot execute these transactions with PIS. You need to have non-PIS account. Here, the non-PIS comes into the picture. So, in portfolio investment scheme, only the securities which are bought under PIS can be routed. All the list that I have explained just now, like mutual funds or IPO subscriptions, are routed under non-PIS. So you cannot be doing it with the PIS account. So buying and selling in the secondary market is a focus point here. It can be based on repatriable or non-repatriable basis. So even non-PIS account, it can be linked to NRE or NRO, completely up to you. But you can't route the non-PIS transactions under PIS. To conclude, as NRIs, you can have both PIS and non-PIS demat trading bank account and it can be linked to NRE or NRO. To simplify it further, make the permutation combination, you can do it with NRE and NRO, but for PIS and non-PIS, all accounts should be separate because PIS and non-PIS itself it's different routes for buying and selling different equity instruments. Hope this is clear now. If you have any doubts, please write to us at info@keerthisfinfo.com or you can ask me even in the comment section. See you next time with another video. Till then, bye-bye.